The Zimbabwean government may well announce plans for government departments to show what a member of the country's reserve bank called high preference for the Zimbabwean dollar in the payment of services. This in emulation of the similar strategy by Russia amid heavy sanctions following President Putin's ongoing invasion of Ukraine. But how will such a strategy for Zimbabwe actually which bears a burdensome trade deficit compared to Putin's Russia with a trade surplus in the billions? Now, economist and director Thabo Biniza joins us to assess the Zimbabwe Putin strategy and its effectiveness. Thabo, good evening and thank you very much for your time and joining us tonight here on In Focus. Is Zimbabwe just merely posturing here, or could they actually go ahead with this?
Well, the country's been known to take quite radical currency reforms in the past, so I don't think that it's far-fetched to expect them to implement this proposal. But as you mentioned, they've got significant challenges that Russia isn't currently facing, because Russia has got quite strong demand for some of its exports, particularly energy-related exports such as oil, as well as natural gas, which it supplies to most of Europe. And in comparison, Zimbabwe has been struggling with economic recovery for, well, close to 2 decades now, and its exports have been somewhat stable but have been growing quite slowly, from about $3 billion in 2016 to where they are currently at around $4.4 billion
Yeah.
in 2020.
How has this strategy of a preferred Russian currency to do trade worked for Russia, and what would a similar strategy mean in Zimbabwe?
Sure. So in the Russian case, the big challenge is the liquidity of foreign exchange. Because of the sanctions, countries are actually penalized or discouraged from buying exports from Russia. So what that means is the demand for the Russian ruble is quite low, and this is done through your exports. So because you're talking about an international market, you need to exchange those, so you typically approach, say, a Russian exporter with dollars, which you then exchange for rubles, which is what creates the demand and keeps the value of the currency afloat. The challenge in Zimbabwe is slightly different, that they've got a very fundamental crisis in that they've got zero control over the exchange of the currency, and as a result, there's a parallel exchange market, a black market that exists, which adds a premium. And so whilst the official exchange rate for the Zim dollar per US dollar is somewhere between 150 to about 180 Zim dollars per US dollar, on the black market you have to bring at least 400 Zim dollars to buy a dollar. So there's this disparity because the government hasn't got tight controls over the exchange of the currency. And as a result of low demand for some of its exports, and the key exports from Zimbabwe include tobacco, gold, nickel, iron, and diamonds, which are the top 5 exports. So there's quite slow or low demand for those exports, also because of the sanctions that exist against Zimbabwe. But they're slightly different in the case of Zimbabwe, that unlike Russia, which has a countrywide sanctions, there are specific sanctions that are targeting political individuals in the case of Zimbabwe.
Yeah. So if I understand you well, are you saying they've got no product currently that is in demand, or at least that would be desirable for any country to want to buy, and therefore they would be forced to use the Zimbabwean dollar?
So the parallel exchange rate is something that exists because of the premium put on US dollars in Zimbabwe. So because of the liquidity crisis, so there's very few dollars in circulation in Zimbabwe, they attract a premium on the black market for people who are exchanging outside of the formal channels. And this is largely because Zimbabwe has got, as a result of the sanctions, the economic destruction that took place has pretty much decimated a lot of the domestic production. So the Zim dollars essentially are only useful in order to exchange into dollars so you can import goods whether from South Africa or anywhere else from the rest of the world. So as a result, the value of the Zim dollars in circulation is quite low, and so the parallel market exists then because people need to exchange them for US dollars in order to import even the most common consumer goods such as bread, etc. So the crisis is, in addition to the export demand problem, is a fundamental problem of Zimbabweans not being able to get what they need to survive locally and needing to import most of that, which is actually in addition to the demand for exports, has pretty much decimated the domestic value of the Zim dollar in circulation.
Yeah. What would it mean then as far as lines of credit that Zimbabwe would want to establish if they took this decision?
Sure. So I think the first thing the country wants to do is to at least pay off or reduce its dependence on foreign capital, foreign borrowings. And that's mainly because there's a liquidity crisis of US dollars, its debt is just going to balloon, and as a result of the depreciation in the currency, it's just going to be insurmountable for government. So government would need to essentially try and get local currency funding, and again, the challenge is that there's no demand for the actual Zim dollars except for perhaps some government services, which is what the government is hoping to do. But I don't think that that's sufficient enough for a market-wide recovery of the domestic currency. What is actually needed in the Zimbabwean case in order to re-establish the Zim currency is to revive local production such that there's a value for Zimbabweans in circulating the Zim dollar amongst themselves and buying products that are local. And this will reduce the demand for US dollars, and as a result then start regaining the value of the Zimbabwean currency in local circulation, and then be able to use that to establish some sort of export base that can then earn additional US dollars in order to stabilize or even perhaps appreciate the value of the currency.
Yeah. This, of course, they're saying is an attempt to bolster, as you put it, the strength of the Zim dollar. What would be the impact, though? What would be the effect? I mean, they want to bolster, but if they were to apply this strategy, what actually would we see happening? I mean, with inflation already sitting at record high levels and just the bare necessities as far as bread and stuff being unaffordable at this point, what would be the impact?
So that's the real challenge that the government faces, that the government itself doesn't produce goods or products that consumers need. And so, yes, they will be able to provide or force payments for goods, for government services in the local currency, but all that really does is just depreciate and appreciate the value of the currency. So what will happen is government contracts will increase in value so that people can earn enough Zim dollars in order to further exchange those for US dollars. Because without solving the problem of local production, Zimbabweans will still need the dollars in order to import everything that they need. And so what service providers to the government will then do is pass on that additional cost which comes from the depreciation of the currency onto the government, and pretty much you'll see, in a way, government is then borrowing from local service providers. But essentially, because that's also limited by the economic activity in the economy and government being able to tax that in order to pay for those services, what might start accruing is local arrears in either government debt or government not being able to pay for some of its services, even though it is forcing its service providers to charge or to pay and exchange in Zim dollars.
Now, let's look at what also came out of this interview. Quite interesting was that the rising annual inflation sitting at 96.4% in April. Is this a temporary shock or is this something that's been a feature of this economy?
Well, not at all. I think the Zim economy has been really facing economic difficulties for quite some time, but things have gotten worse since 2019. The economy contracted by about 6% in real terms, and inflation in 2019 was 255%. And with the pandemic in 2020, things got worse and the economy contracted again by about 5%, but inflation shot up to about 550%. So this is almost reminiscent of, the 2008 crisis times in that period in the country. So at around 96% inflation, this is pretty much equal to the average of inflation in 2021, which is around 98.5%. So I don't think that it's a sort of one-time shock. I do think that if it will persist, also because generally the cost of imports have now risen as a result of the sanctions against Russia, and this is definitely going to be bad. But obviously it's also lifted the price of commodities, which Zimbabwe exports, but it's now going to be a balancing act as to whether the cost of imports has risen far greater or less than the prices of the commodities that they export, i.e. tobacco, gold, diamonds, nickel, and iron.
Yeah. So they also reported that they've seen a slowdown in platinum revenue, and this is because of the 15% beneficiation tax. Talk to us about how that works and why that has resulted in a slowdown in platinum revenue.
Sure. Well, I think the platinum revenues also need to be understood in the context of what platinum is generally used for, and that's primarily as catalytic converters for automobiles. And here we're talking internal combustion engines, so petrol or diesel vehicles that use fossil fuels. And as you would know, with the COP conference and the commitments that have been made, but not only by countries but also large automotive firms to end the production of internal combustion engines, some as soon as 2030, this has had a significant impact on the demand for platinum metal groups, which are used in the catalytic converters, which is basically a piece of equipment in the vehicle that reduces the carbon emissions. So essentially what this has done is had a rippling effect onto the market and the mining sector. So in addition to the government pressure on the additional taxes that they're charging, the market itself has been facing challenges with demand as a result of the commitments towards production of electric vehicles, which are intended to replace the internal combustion engine in future.
Yeah. This beneficiation tax, is this something that South Africa could possibly look at?
Well, again, the challenge is going to be how does Zimbabwe promote some of the little green shoots that still exist in the economy. And, one could easily argue that, yes, government could tax certain industries in order to raise revenue, but then there is also tax fatigue and also very limited returns that some of the sectors are already making currently. So in an economy that's generally contracting or struggling to recover from the pandemic, and even in the South African case, which had economic crises or challenges that predate even the COVID-19 pandemic, government really needs to ease the tax pressure on businesses, because that raises the bottom line for business and essentially stimulates business. And it's not necessarily an austerity or additional taxes that are going to help, but obviously the pressures from the economic downturn are quite direct in terms of the social development impact and the problems that they cause. For example, about a third of the Zimbabwean population, as a result of the 2019 economic crisis and the COVID-19 pandemic, is said to be facing food security challenges this year. And so governments essentially think that they would need to tax in order to provide social safety nets for the population. But again, as I said, that is also what reduces some of the economic activity or further investment in some of the very little existing or remaining green shoots in the Zimbabwean economy.